breaking news, folks, continues at this hour. After the worst one-day sell-off since 2008, here's where we stand right now, and Dagan was just talking about it. The Dow now down 217 points. Remember, we had an early triple-digit surge. Initial reaction to the July jobs report had been positive, with the non-farm payrolls much better than expected. Are investors ready, folks, to stay in the market going into a weekend with so much uncertainty? Hi, everyone. I'm Cheryl Casoni. I have the best and the brightest on set with me today. Rob Morgan, Chief Investment Strategist at Fulcrum Securities, is here, and Jim Frischling, President at NewOak Capital. Plus, we have...
I want to bring something up you said about technical damage. 1170 is a major level here in the S&P, Cheryl. Those are our lows approximately from last November when we were in the midst of QE2. If we close below there today, you're looking at another support level around 1120, which I think has no doubt of being hit if we get down there.
Jim Frischling, some of this doesn't still make sense. You've got 75% of companies have now reported earnings for the quarter, for the second quarter, and they beat expectations. Yet this is the activity we're seeing in the market today.
Well, yeah, you're absolutely right. The glass half full, and my favorite thing I'm seeing in the markets right now is just that. The performance by these corporates has exceeded expectations. They have stronger balance sheets and tremendous cash to get things done and work. The negative side is the overhang from this whole debt ceiling debate is that government is going to, they don't have another card to play. I think a lot of people made money betting that the U.S. government and others could step in and provide the stimulus and the support which would benefit stocks. With the government kind of, to a certain extent, somewhat now being sidelined, I think you're seeing a lot of money coming off the table.
Bob O'Brien, is this...
So we've had a big run. We've had about a 12% pullback. You know, it doesn't, you know, I want to use the word typical, but even though to a lot of us and certainly to a lot of our clients it doesn't feel typical, they're definitely scared. But the work we're doing still suggests flat to muted returns this year, that 1250 to 1300 range. You know, I feel pretty good about that, and I don't think we have any reason to change it right now.
Jim Frischling, are we getting a dead cat bounce right now, or is this really, are we on our way to a bear market?
There are a lack of alternatives right now available to investors. So as Nicole was highlighting, I think there are certain staples that are going to be attractive and are going to be interesting. I think one of my biggest concerns has simply been the thesis of don't underestimate your enemy. And I think the markets, to a certain extent, the credit crisis has been, you know, a tremendous challenge. And I think the U.S. and the European governments continue to be behind the curve. So the question is are we getting ahead of this, or are we still being very reactive?
The Dow just turned positive, everybody. I want to point all of you to your screens right now. This is the type of volatile day we are dealing with. I mean, what you saw yesterday was selling begetting selling. So we saw, especially in the last 30 minutes of the session yesterday, a complete downward spiral. This is, make up your minds, folks. What do you want to call this? Do you want to call this, I mean, like I said to Jim just now, a dead cat bounce? Is this truly, we're heading to the negative? But again, the range has been incredible for the Dow today. More than 400-point range. When do you ever see that on highly strong and heavy volume? Thank you very much. I want to get some more breaking news into our viewers right now, folks. Again, as I told you, we have had a lot of volatility in the markets. I want to show you what the markets are doing now. The Dow now breaking above 100 points of a gain. Again, Rob Morgan, I want to bring you into this. What are you seeing here? Does this make sense to you, Rob?
No, it doesn't. I think, Cheryl, that it normally would have been a low volume day. Yesterday, of course, was such high volume that Bob O'Brien was talking about rookies on the trading desk afraid to step in. I think some of those people on vacation are saying, you know, this is a buying opportunity. Program trading when the S&P 500 hit 1170, which is a key support level. So I think we're starting to see some of that.
Jim?
Again, the corporate earnings to me represent the single best story and the cash on the balance sheet. And that to me is what I feel investors at the end of the day are going to, you know, sift through this market and find very good value. That said, I will tell you the pressure on Europe, and we were talking offline about the S&P downgrade. The rumor of the downgrade apparently brought the market down. When that downgrade happens, we think the first reaction is going to be a fall off in stocks, but that's going to create a buying opportunity because the fact is whatever S&P downgrades us to, if it's AA, that's the new AAA.
Scott Martin thinks Europe's a time bomb, and I hope he's wrong, but that makes a lot of sense as to a piece of why we're saying this. But there's a lot of things happening in the market. We can't point you to one thing. It's several things affecting all the volatility today. We're going to take a break. All right, Rob, just a couple of moments left here, but I do want to ask you, as you watch all of this, When you stand back, and I know your clients are calling you, what do you say to them about a day like this?
Cheryl, I say the yield curve, great corporate earnings, and even economic data that's weak, showing no recession. So right now, I would say no bear market. The market's going to find some stabilization in here someplace and continue the longer-term bull market, in my opinion.
Okay, and you think we're in a longer-term bull market overall?
Which
okay, because I've heard the opposite.
By correction, by a number of corrections. I think this is one of them.
Okay, Jim, what do you think? What do you say to your clients right now?
I agree with some of the positive sentiment that Rob's sharing. I also feel, when you mentioned earlier in the show, that words matter. And we've been talking, there's been whispers about 08. There's been whispers about the Lehman. There's whispers, certainly more than whispers, screams about Europe. So I'm not surprised that people are taking some money off the table or that the volatility is high, because clearly people are concerned that while there's no liquidity issue right now, I don't think people want to be left behind the curve. So right now there is some pressure that maybe we don't have our handle on this situation. And while there is some positive job growth, it is certainly very muted. So I understand the volatility. I think people are very nervous.
The blog I'm writing right after the show is that words, it's going to be called Words Hurt. And it's because I believe that the rhetoric that is coming out of Washington, I think their time in the sun is over. They've got to sit down. They need to walk over to Treasury, walk over to the Fed, sit down and listen to what some smarter folks than them had to say about where this economy needs to go. And I think if they would do that, back away from the microphone and quit politicking for just a few moments, maybe the economy could actually get turned around. But that's just me, and I'm going to be blogging about it. Rob Morgan, Jim Frischling, thank you very much, guys. Crazy day for you both to be here. I'm glad I had you. All right, here's